Hello, and welcome to CMS Forex News. I'm CMS Market Analyst Nick Nasad, here with today's news. It's Friday, October 24th, 2008. Today saw another meltdown in global markets, especially in Asia. Fears of a global recession swept across the region, bringing Japan's key index down 9.6% to close at its lowest level since April of 2003. Benchmarks in Hong Kong, Australia, Singapore, and Taiwan all dropped to their lowest levels in at least 3 years. That sell-off passed to shares in Europe and the UK, and they saw their indexes fall around 5%. The big winner in the Forex market from all this uncertainty was the Japanese yen, as traders continue to unwind carry trade and capital flows move towards Japan. The Aussie yen pair swung 1,200 pips from high to low today, finding support near the 55 level. In the UK, the advanced release for third quarter GDP came in at negative 0.5%, marking the first quarterly drop since 1992 and falling below forecasts of a 0.2% decline. On an annual basis, GDP was up 0.3% compared to expectations for a 0.5% rise. The data suggests that the UK has entered a period of recession and that it may be more deep and prolonged than originally estimated. UK stocks tumbled as the poor GDP release mingled with the sell-off in Asia. The pound yen slid an incredible 1,900 pips, finding support at the 139 level. It managed to pare about half of those losses in New York trading as US stocks avoided its own meltdown, though they were still hit hard. The pair is set to close the week around the 150.50 level, which is about 2,600 pips lower than where it started the week. Against the dollar, the pound tumbled below $1.53 in its biggest drop in at least 37 years. From today's high to today's low, the change was about 1,000 pips. As we saw in the previous pair, the pound managed to pare some of its losses in New York trading. Moving on, European data showed that the preliminary release of October's manufacturing PMI slid to 41.3, far below expectations. The services sector also showed a sharper contraction, falling to 46.9. The data suggests that the Eurozone is likely already in a recession as well, and now expectations for its severity and length are becoming more pessimistic. The ECB cut rates by 50 basis points to 3.75%, as part of a global coordinated move to reduce borrowing costs early in the month. Now, expectations are that the Governing Council will slash rates another 50 basis points in their meeting next month. The euro-yen plunged 1,300 pips from its high to fall to a 6-year low against the yen. The sell-off in the pair came during the Asian and European sessions, as there was some correction in the New York session, which favored the euro. The euro-dollar pair tested support at 1.25, which was a fresh 2-year low. The dollar gained against its rivals as the panic in Asia and Europe is boosting demand for safe assets like the U.S. Treasuries. In other fundamental news, Canada saw its annual consumer inflation rate inch down to 3.4% in September from its 5-year high of 3.5% seen in August. On the month, prices rose 0.1%. Both of these figures were higher than expected. The annual core rate remained at 1.7%. In the U.S., meanwhile, data on existing home sales showed a marked improvement as lower mortgage rates and lower prices increased sales 5.5% in September. Inventories were also down. Those three factors are what economists are looking for in a bottom, though there needs to be several more reports like this one before anyone starts talking about a recovery in housing. The US dollar-Canadian dollar soared to 1.2840 this week, a 4-year high, as crude oil, a key export for Canada, has tumbled more than 10% this week. OPEC cut its output quota by 1.5 million barrels today, but prices still fell, as the easing in production will not matter if demand continues to fall amidst the global slowdown. In our final pair, the increase in risk aversion and sell-off in global stocks pushed the dollar-yen pair to a 13-year low near the 91 yen per dollar level. The fall from high to low amounted to about 670 pips. The Dow Jones Index was down 300 points as of 3 p.m. Eastern, and the Nasdaq and S&P were down 50 and 32 points respectively. Still, U.S. markets seemed to escape the worst, as futures trading had stocks falling much worse prior to the New York Open. That explains why the yen gave back some of its gains in New York trading. Next week opens with inflation data from Japan, housing prices from the UK, business climate data from Germany, and new home sales from the US. On Wednesday, the FOMC will conclude its meeting on interest rates and is expected to cut rates to 1.25%. And that wraps up another wild week in the Forex markets. Thank you for joining us here at cmfx.com and enjoy your weekend.